Okay, welcome everyone to this week's webinar. My name is Brady Knapp with PREIshare. We're super ready to talk tonight about the secret to liquidity for passive real estate investors. Now, this is very important. We're very excited about this. We've been doing this for about 2 years now. We've kind of launched some of the technology as far as letting passive investors receive liquidity to their investments, which we're super excited about and really hope we can change this industry for the better. Just a little bit of housekeeping. We are going to be recording this webinar, and we can email out this for replays after the fact if you miss it. We also would love for anyone to share the link to people who you think would love to know more about what we're talking about tonight. As you'll see on your screen, there's a chat function at the bottom. So please chat in, say hello, tell us your name, where you're from, or how you heard about us. We'd love to know who's in the audience tonight. There's also a Q&A function. So at the end, we'll have a Q&A section. We can answer questions from myself, Kent, or Christian, and we'd be happy to dive a little bit deeper into the details, so to speak. So I'm going to hand over this to Christian. He will kind of lead the discussion, do a little bit of a PowerPoint presentation for us, and kind of lead us into our conversation tonight. Christian Sadler is our VP of Investor Relations. He is the Syndication Show co-host, and he's very well experienced in the real estate industry. Been doing it basically since he was a young lad, you could say, so he knows what he's talking about. And I believe, I guess also should introduce Kent here. Kent has loads of years of experience in all things real estate and investments. He's kind of our turn to him and say, Ken, what do you think? You know more than I do type of guy. So really happy that he's on here with us. He has a lot of insights in this industry and a lot of detail of actually being in the weeds with analyzing deals and whatnot. So he's not just talk the talk, but he has walked the walk. And with that being said, I can pass it over to Christian to begin our presentation.
All right, let me go ahead and share my screen. I'm just going to make sure that you guys can see it once I get it up. So here we go. Can you guys see my screen all right?
It's there.
All right.
Yeah, looks good.
Well, thank you, Brady, for starting things off. Really grateful for everything that you do for this organization. It's a lot of fun in building this together. And let me just jump into some information for you guys. Again, I just wanted to repeat what Brady said. If you are on with us and you just want to say hello, put that in the chat feature. We're going to see that as organizers. If you don't see anybody else chatting, that's because we only have that coming to us for now to keep the focus on the presentation. Want to keep things moving along very quickly. And then also, we do have the Q&A. And that's where you'll put your questions. That's where we know that we'll see them. So we want you to put them there. We're talking about the secret to liquidity for passive real estate investors. And before I get into that, I want to talk about what a passive real estate investor is in the sense that we're talking today. Because I've been in real estate investing for 18 years now. And I've also been in the education space during that time. And I know that there's a lot of misnomers from people who think they should be invested in real estate and what the word passive really means. This is not about going out there, buying a property, fixing it up, turning around and selling it. That is the furthest thing away from passive. And I can tell you that from a long career flipping properties. But also, if you're buying investment properties like a single family home to rent out, or a duplex or a fourplex or an apartment unit, I can tell you right now, that is also not passive investing. It's more passive than, say, flipping a property, but it still takes effort, and you are an active investor if you are in that role. Even if you go buy some sort of a commercial property, triple net lease, you have a property management company that takes care of the management portion of it, I'm telling you right now, that's still an active investment. You have to be actively involved, and I've seen too many people get hurt thinking that they are passive investors. They hand off the keys to a property manager and say, just send me a check. And those property managers aren't always as professional as we'd like. Sometimes they don't manage your money or your investment as well as you would like to. So you're going to have to take an active role if you are going to be the owner of real estate. So what we are talking about with passive investing is we are talking about true passive investing, which is where you go find a good operator, somebody that has syndicated some sort of a real estate transaction, and you invest into the company. So you own a share of that company, but you are passive in nature, and the operator is the one out there operating and being active in the transaction. And the longer I go into my career in real estate, the more I realize that this is truly the only passive way of investing, is to find really good operators that are doing the active investing so that you can take the passive returns. And it's a really great opportunity in a lot of cases, because many times these operators are giving up 60, 70, even 80% of the profits to you as the passive investor. In fact, with the PREIshare Liquidity Fund, on a separate note, we actually give 90% of the profits to our investors, the ones that put up the cash, so that we can go out there and buy the assets. So that's who we're talking to. We're talking to an investor who owns a passive interest in a current real estate syndication that may want to sell their interest. So you might also know yourself as a limited partner or a passive investor inside of a real estate syndication. We can also service those who are GP sponsors who have excess shares that they want to and are able to sell. Now, this comes down to the governing documents of that transaction that you first set up when you syndicate that initial real estate transaction. So it's a current deal. And I'm saying this because most common question is, well, can I use this to just get equity out of a property, or to, to leverage because the banks aren't lending right now? This is really designed to help those who are passive investors liquidate their shares in an existing real estate syndication. So there's a little bit of the agenda there. I don't need to run through that because I'm going to go through the agenda. And I just want to know, has anybody that's on the line ever been in a situation where your money is invested, it's doing great, but suddenly you need money for college tuition or a medical expense? Or maybe you're on the list for when the Ferraris or the Porsches come out and you get to buy those when they come available, but you're actively investing. Many of the best investors I know, they make their money in their business or their profession. And then as soon as they make it, for as much as possible, they invest that money because it drives them to continue to go out there and build, and they're able to take that money and let it compound. But sometimes they need liquidity. And oftentimes it doesn't come at the times that they realize they're going to need that liquidity. Sometimes they might need that liquidity, but the investment that they got into has extended beyond its original slotted time slot. If any of that sounds familiar to you, you should probably pay attention to the PREIshare Listing Hub. Because as far as we can tell, this is the only platform out there where you can buy and sell freely in an active and open marketplace fractional shares of syndicated real estate transactions. And we have pioneered this because we have leadership within this organization that have syndicated real estate for years. And they talk about what they realized was the big lie that they were telling to their investors. And that lie is that you are investing into real estate, and because real estate is an illiquid investment, you can't buy or sell, and you're just locked in for as long as the deal goes. The truth is, you're buying shares in a company. Just like the stock market, where you go buy shares in a company and that company goes out there and operates, you're buying shares in a company, and that company is going to go buy assets. It's going to take those assets through a certain cycle, and then ultimately there's usually a capital event, and that's where you get cashed out. However, what you own there is a security, even if it is not a registered security, because it might be exempt due to oftentimes Regulation D. So those shares can be bought and sold, but oftentimes they're limited strictly by the rules in the offering documents. And our CEO, Mike Anderson, talks about how, they did that in the beginning thinking it was a good idea, but the longer he went, he realized he never wanted to make his investments illiquid for his investors. And oftentimes it created more challenges than anything when somebody needed to liquidate and didn't really have an option. The real issue, though, is this lie, so to speak, was not malicious intent. They were not out there trying to deceive you. Most syndicators want to set proper expectations with their investors. They don't want you thinking that you can invest today and then a year down the road, you can just get your money out, even though they're probably in the middle of some sort of a process of remodeling a property or improving the management or whatever it is. There's usually a business plan and a timeline that's slotted for that particular syndication. So they want to set those proper expectations. And most syndicators have to scale in order to really make a living, or let alone be wealthy. Most syndicators don't start syndicating because they were independently wealthy and they just wanted to, go out there and get money from other people. It was usually they were doing great and they found a strategy that works, but they didn't have enough of their own capital, so they needed to find capital elsewhere. And usually they'll have to scale in order to really make a great living. So they want to know and choose who's in the transaction with them. They want to understand who they're dealing with, and they don't want to have to backfill operating transactions when they're likely focusing on the future and the next deal that they have under contract. So until now, there really hasn't been somebody in the middle ground to align the interests of both the syndicator and their passive investors. But along comes PREIshare. Between all of us, we have over 100 years of combined real estate experience, and that's a very low estimate of that number. And we're helping to bridge the gap of helping the syndicators and the passive investors. So throughout the past almost 2 years now, we have meticulously refined our models, procedures, through rigorous verifications. We have run this by many industry experts, and we have a tremendous amount of experience within this team. And other experts in the industry are talking about what we're doing. So the Listing Hub is simply this. For buyers, you can buy fractional interests in existing real estate syndications. You can look at the current deals that are on there. You can find operators that you might already know about, but may not be doing a raise, and see if you can buy some of the shares that are from their current investors. You can buy interest with a proven performance and track record rather than buying it based on the pro forma. You can buy cash flow at a discount. This is basically the thesis of the PREIshare fund, except we're doing this at scale where we can buy many, many of these fractional interests within real estate syndications. And it's short-term or mid-term investments. So mid-cycle investments are going to see capital events much faster. For sellers, you're able to sell your fractional shares, liquidate, so that you can move that money to other investments or other capital needs. You can get a real valuation of your property or your interest in a property, interest in a company that owns a property, and you can get that from the open marketplace. And the beautiful part about it is if you decide to list on the Listing Hub, we can even help you breach the conversation with your sponsor, because ultimately they do need to sign off on the transaction. So here's what it looks like. Quick phone call with us. You're usually going to talk to Julie, who couldn't be on the webinar with us today, but she's amazing at what she does. She's going to help you add your listing onto the Listing Hub. So then we are out there promoting the Listing Hub to accredited investors. And when these accredited investors see your offering, they're likely going to make you an offer. And ultimately, you're going to go through the negotiation process, and then there's a sale. Everybody has to sign off. You sign off, the buyer signs off, and your sponsor signs off. So here's what we're offering for you. If you have an LP share right now that you would like to liquidate, or you would like to see what you could liquidate for, we're offering you a free listing. And all you have to do is go to PREIshare.com/free listing. Seems pretty easy, right? And it really is that. Just go to PREIshare.com/free listing, and we can help you get your shares listed today. Now, I wanted you guys to have the opportunity to talk to Kent, and I want to mention his brother, because there's kind of the story of two brothers, and I'm refining this story a little bit. One day I'll tell it to you guys in better detail about how the original idea that led to a billion-dollar enterprise actually came from a stoner out behind the backside of a company. But I'll tell you that story later on. What I do want to tell you is Michael Anderson built an amazing organization called RealSource. And when he sold that to his partner, they had about $1 billion in assets under management. Along the way, though, as they were getting that organization up and running, he was able to coax his brother, Kent Anderson, out of institutional investments. He worked for a very large firm managing billions of dollars in assets for very wealthy folks. And he pulled him over into the real estate private equity world to help manage that portfolio. And Kent has analyzed, looked at, and helped to purchase billions of dollars in assets in real estate syndications. He understands this business inside and out. And I respect so much what he's been able to do and what he continues to do for both his current company that he works with, including PREIshare. So, Kent, thank you so much for being on here. I'm grateful to have you here. What I want to do is at this point, I'm going to let Brady take back over and field the questions that are coming in. We'll answer a few questions for you guys, and then I'm going to put back up on the screen that list or that website for you where you can get your free listing. And before I turn it over, Kent, what do you feel like this means to the industry? I mean, why are you a part of this when you have so many other interests in real estate? Why are you a part of this? And what do you think it means for the industry overall?
And when I was there at RealSource, I worked with a lot of individual investors, and that was a lot of fun. That was probably the best part of doing the business, is working with them and trying to make sure I understand their needs as I match up the deals that work best for them. And I did get the question that you talked about earlier, about whether or not my interest is liquid, and I gave them the same pat industry answer that everybody does. Well, this underlying investment is not a liquid investment. It's going to be ongoing, and so that was a standard answer that we gave them, and it was a true statement nonetheless at the time, not because it wasn't a security, because it was, which by definition makes it sellable. It was true only because there didn't exist a secondary market. So basically what we were limited to is selling it to other people in the deal, and most of the time, at best, they'd be willing to pay what they paid for it. And so here you have a deal that may have done really well, and all of a sudden, you have to give up a whole bunch of your return because of whatever your circumstances are to somebody else that's in the deal, because you have a limited audience of sending that to. There's no real secondary market. And that's what I love about what we're doing here, is because there needs to be a secondary market for this. It's the reason why return expectations for real estate are higher than what you would find elsewhere, because the fact is they're going to get locked in for a long period of time. That creates some uncertainty. They don't have control as to when they want to get it out, and so they're going to require higher returns, which makes the cost of equity more expensive for the sponsors, the syndicators as well. And so this could be a good thing for them. But as you were going through that, one of the things I wanted to say and think about, and I'm sure we've all seen in the news where the Fed is forecasted reducing interest rates this next year 3 times. And as I thought about the impact on that in these syndications, cap rates typically follow interest rates. There's a lag, but it makes sense that would happen because the cost of the deal goes down. When you could find deals that become less costly to do, then of course people will try to charge more for them to make up for that and still get the same returns. So the syndicators love that, and the investors of course love that too when they can go out and sell their deals. So in this coming year, this could be a good opportunity for a number of people to do one thing that I wish we had more of on that list there, and that's to capture gains. I think that's, if there's any reason to sell investment that makes good investment sense, that's the best reason right there, to capture those gains. It's the movement of money that makes money. The dynamic releveraging of that money. When you've got the gains, you can go back and take that and put it out from one deal into 2 deals, and then 3 deals, and you dynamic releveraging that. And of course, you've got a whole bunch of money then working for you when you do that. And of course, that's how many people have made a lot of money in real estate, is doing it that way. And this year may give them some opportunities to do that this next year as interest rates go down, and cap rates hopefully will follow.
Yeah, and that makes a lot of sense. And that's, I think, the interesting concept of this, because many people, when they first see the listing hub, their initial impression is, oh, great, I can liquidate bad deals. And that, I think, is like probably like on the very low end of what the usefulness of the listing hub is. Because in reality, like you said, if you're in a value add transaction, for example, and that property over the last 18 months has doubled in value because of all of the repairs that have gone in and all the things that have been done and the stabilization of the rents. Typically, if you wanted to sell that early, you're going to sell it back to whoever got you into the deal at par, at what you got in at or less. So if you could go into the open marketplace, and even if you can't get double the amount, if you could get a 50% return on your money, and then you could take that money and re-leverage it into another value add transaction, if you start thinking about the compounding effect, it can be absolutely huge. And I think a lot of people will use the listing hub strategically, including us.
Yeah, short cycle investing has not been an opportunity or strategy, I mean, that you could take advantage of in real estate syndications up until now. As this takes on and the secondary market becomes established, it'll create a great opportunity for that short cycle investing, which is a real powerful way of making good money in real estate. As long as, of course, you're doing your homework and the deals that you're buying, and you've got it with good sponsors, yes, then of course that short cycle investing can be a powerful way for you to grow your real estate and capture those gains maybe earlier than what the sponsor is choosing to do.
Absolutely.
Yeah.
All right, Brady, it doesn't look like we have any questions in the Q&A as of right now. So I just wanted to open this up again one more time. Folks, if you guys have any questions, this is your time to ask them. You can ask them of myself. You can ask them of Kent. You can even ask them Brady, because Brady is a guy who is talking to real estate syndicators basically every day. We have an approved sponsor program within PREIshare where we actually take people through a process looking at their background, looking at their track record. Before we feature anybody on our website as an approved sponsor with PREIshare, there's some pretty heavy lifting in making sure that they are who they say they are and that they're doing investor-centric type of transactions. So again, this is your opportunity. If you have any questions, I'm going to open it up right now. And if not, hey, we made good time.
Okay. There's another reason that could be coming up this year too that is timely. Often when there's changes in markets, like we're going to see now, we saw a lot of change with inflation, interest rates going up. It definitely has impacted things, and there's ways to make money in each one of those cycles as they change. And it certainly is, as we're looking down the road, for those who are astute and understanding the opportunities with different classes of investments, they can see that there's going to be opportunities that are going to come from that. Whether or not you want to come in and out of stocks to go to real estate or vice versa, there's opportunities there. And that again underscores again the importance of having a secondary market so that you can take advantage of that timing. And so the word of mouth of getting this out to everybody and helping everybody understand the importance of getting this out there just really is huge, because it's a big opportunity that this industry really needs. And as a syndicator, if I could go back in my career and do that again, I would have loved to have been able to tell investors, you're not locked in. You can take advantage of these things as you want to, and then and as a sponsor, of course, that is a powerful thing, because one of the things that Mike and I found in our experience and what we've seen is about 70% of the investors that are accredited that could invest in real estate syndications don't, when they find out that they're liquid or they perceive that they're illiquid. They won't do it. And so that gives us sponsors a huge a number of people that they could then bring into deals, which then again reduces the cost of equity because you've got more money coming into it. So it's a great thing for sponsors to do. And so I would talk to your sponsors and help them understand how important this is for them to do that.
Yeah, it actually brings up, reminds me of a conversation I had recently with a friend of mine. And this friend was looking to invest some money into a real estate syndication. And he happened to know that this guy was on the syndication show and was going through the sponsor approval process. So he just called me to say, hey, I don't know this guy. I know you. I trust you. Do you think I should invest my money? And I just asked him some typical questions. And, I don't give investment advice or anything like that. But I just kind of asked him his reason for investing. And I told him, listen, if you're investing in a real estate syndication because you need the cash flow in order to pay your bills, that's not the right reason to invest in a real estate syndication, because there's all kinds of things that can happen along the way. And really, you hope for the cash flow and you hope for the upside, but you need to make sure that you're smart with your money. And he kind of told me, you know what? I don't need the money. I really would like to have the cash flow, but it's not going to kill me if this thing doesn't go through. But I also understand that there's a new marketplace out there. And he knew about what I had been building. And he said, I think I need to make sure that my sponsor in this case, right, the gentleman who put together the deal, he said, I need to make sure that they are approved and they're willing to allow sales within your marketplace before I invest my money, because I want to make sure I have some sort of a liquidation option. And I know that's probably not going to come from the syndicator themselves. And so I think that that's going to be something that's common practice in the very near future, where if the syndicator is not allowing for outside sales of these shares, they might be even more limited in who's going to invest with them.
And I think the reason why they have done that is simply because they have a standardized agreement that the attorneys that provide these templates put the language that way at a time when there was no secondary market. That's the only reason why it was there. But it didn't make any sense for all the reasons I mentioned earlier. I mean, there's a whole bunch of reasons. It didn't make sense for them to do that. You know, it just occurred to me, and here's another thing too, I think, Christian, that is one of the mistakes that investors often make. I've seen investors, you know, when they look at the executive summaries they get from a syndicator, often their decisions are made based on the returns of the property, and they get swayed by all of that. I mean, have you ever done that, Christian?
Oh, absolutely.
Oh yeah, and it's easy to do, and the same thing happens too when you've got a property that's given you great cash flow. I mean, I remember a property I had once that was in a syndicated deal. I was an LP investor with that group there, and they had a deal in Colorado Springs apartment complex that they put, I think it was about $40 million in it. The acquisition price is fairly new property in good shape, and it was a great location. They'd really done their homework on that and done a fantastic job in buying that property at the right time, and then cut a great price on it. And it appreciated within about 2 years with some of the value add stuff that they did to it, which were fairly minor. It appreciated to almost $90 million on equity of about 10. I mean, you can imagine. And of course, when you see that happen, of course, you think, okay, well, I should just hang on to that, you know. Or you got another deal. Let's say you've got another deal that's really maybe doesn't have all the upside, but it's got great cash flow and stuff like that. You want to hang on to that stuff like that. It's done really well. Doesn't mean that it's always going to continue to do well. And do you think that first one I mentioned is going to have another 2 years, just like the first 2 years they had? Likely not. Not likely not. And when sponsors buy these deals, they often go in and do some value add stuff or things to upgrade the property, to improve the NOI. That was especially important as interest rates were increasing over the last year and cap rates were decompressing. That was an important way to improve the net operating income, so you can give value to the property just by what's going on with cap rates. And it's an important way to do it. But anyway, what I'm saying is that you have to make sure you're not a real estate collector. You need to be a real estate investor, and you need to understand that you don't get married to those returns when they start to come in like that. Sometimes that's the best reason to sell it, to capture those gains. And one of the things that Mike and I often always stated too is it's best to do it at a time when there's a little bit left for the next person coming in. And that was, we were thinking about when we're buying the piece of real estate, but I think the same principle also applies for the individual investors in the deal. You know, if you wait too long, then of course all those gains can disappear pretty quickly as the markets change. And that happened as interest rates increased over this last year and a half.
Yeah,
so
you can think of a lot of people that probably could have gotten a real pretty penny for their multifamily property, and over the last couple of years might be a little bit harder for them to sell, just based on the fact that people can't get the same type of loans that they used to be able to get.
No, they can't, and that makes a big difference. And those things have impact on the industry. So you have to really look down the road and anticipate the changes that are going to be taking place. The Fed definitely forecasted that for us here this week. The changes that are happening with interest rates and the money supply, what's going to happen with that, and looking at those, you can see how that's going to impact different classes of real estate. And if you know your deal, it's important to look at that and consider whether or not it makes sense not to capture that at some point in the coming year.
Absolutely. Well, Ken, thank you so much for being on here with us and bringing some of your insight. Brady, thank you for hosting. If you guys are still on, I want to make sure that you understand that you can get your free listing by just going to PREIshare.com/free listing. And I'll tell you right now, if you have any inclining that you'd be willing to sell if you got the right price, put it on the listing hub. Let's see if we can get it for you. Thanks for joining us, folks.
Thank you.
Sounds great.